Are you waiting for inflation? It's already here. You came here for the truth, so let me unveil that for you. Today we're going to talk about inflation. We're going to look at what's been happening with food prices. We're going to talk about where money has been moving to in the different financial markets. I will give you it directly from the source. We're going to look at, of course, repo operations, and I want to talk about the economy as a whole. There are trillions of dollars that are going to be pumped into the system in addition to the trillions we've already seen. I've got way too much to cover. Let's get into it right away. Repo operations hit a record high, and you could see right here going down, you will notice $480 billion. $480 billion, never seen anything like this before on the reverse repo operations. This continues. I'll keep you up to date. This right here is the ultimate theme. Money is cheap, let's spend it. White House $6 trillion budget message. And you will see these patterns repeating over and over again. Do deficits matter anymore? Apparently the first budget signals that they don't. They are going ahead with this plan. The helicopter money is essentially here. We are looking at stimulus in all categories being given out. This right here should give you a warning message for what is to come. There is this debate about inflation and deflation, but in many ways that inflation is already here. We'll talk more about that in the Money GPS Insights today, but I just want to make it clear of what's been happening and show you the policies that have been put in place already. You have seen these stimulus packages from 2020 into this year, in 1 year, printing up trillions of dollars through the quantitative easing. You're looking at it through all the different stimulus that's come from the government. They're doing these infrastructure packages and so on. Whether or not this is beneficial and you agree with it, to me, it's not really something that I really focus on. I look at the economic factors. I look at what's happening with the aspects of the government and aspects of the Federal Reserve, the central banking system. I look at how this affects you in your own wallet. And that's really the key. That's what needs to be understood, because many people, they really get focused on something that should not be taken into account at this time. We need to really realize an action taken today may not really be felt until years and years later. And it's basically impossible for the general public to realize it. You know, a lot of the effects that we are seeing right now today isn't because of what happened last year. It's because of what happened since the financial crisis and what they had been doing. So we have to realize that and track it and trace it. But the average person simply doesn't have the desire to do so. But guess what? I am looking into all of that information. We got so much to get into today. All right, enough ranting, GPS. Get into the information. Well, this is it right here. I will talk more about where the money has exactly has been going into, and I will give you the charts on that. But I wanted to start with this Bloomberg article right here. Great inflation trade of 2021 takes a back seat on Wall Street. If you remember, I covered this in the Money GPS Insights a little while ago. I said that it looked like growth stocks were going to be taking off and commodities had been pulling back. And the data is now in to show you that that has actually been shown to be accurate. And it didn't take a genius to figure that one out. That's what's been happening. Value trade posts the worst weeks in September as tech recovers. Inflation positions remain far from crowded, according to JP Morgan. You're looking at this information right here. I wanted to highlight the tech-heavy NASDAQ 100 outperforms the Dow Jones by the most in 7 weeks. They give you some more detail here, of course, if you're interested, and showing you at the bottom, the reflation rally may yet power ahead if the business cycle booms anew and renews investor conviction. JP Morgan, for one, estimates money manager positioning in inflation-sensitive assets, including commodities, is still well below 2008. So this is, of course, something that we should be paying close attention to, obviously, because that's where a lot of money is going to be moving from. This shows you one way that it should be should be making a lot of sense, and yet it doesn't. This is showing you directly from the United States Mint. The US Mint is committed to providing the best possible online experience to its customers. Okay? Read this next line. The global silver shortage has driven demand for many of our bullion and numismatic products to record heights. The global silver shortage. You look at the price, it's been there forever. So something is going on here, and it is especially concerning when you look at precious metals. Precious metals have not felt the love of all of these other industrial commodities that have been skyrocketing. Isn't that strange? So this chart right here and the next one, I believe, is just showing you what investors are doing here. Just showing you specifically that the Federal Reserve, what they dictate, is what investors believe. That's essentially all I'm showing you here in this one. And reflation trade, the value strategy has tended to move with inflation bets. But right now, as it stands today, it's all temporary, it's all transitory, so you don't have to worry about it. But then you look at the actual clear-cut data. And I want to make something clear right here. Could you see lumber continue to fall and copper continue to fall and iron ore and all these things? Absolutely. But you as the individual, you will continue to pay more. You know, when they increase prices, they always decrease them and they try to save you money. You know, it's that's history, right? I mean, prices are just constantly going down. I mean, I go to the grocery store and every time it's just going further down, and they're just trying to really take from their corporate profits and give back to the people. Oh, wait a second. Sorry. I guess I blacked out there. I must have been falling asleep. The UNFAO Global Food Price Index rose for an 11th month in April to a 7-year high at 120.9, representing a year-over-year jump at 30.7%. Food inflation has not risen this fast since 2011. All sectors rising, led by sugar and oils. So this right here is just giving you an insight as to what's happening with the food prices. You've already got many of these businesses that are saying we are going to increase prices. Others have said we have increased prices. And of course, the consumer will pay. The consumer will pay. This one right here is just showing you commodities nearing the strongest reaction on record to global growth. It breaks it down. I don't know if you could see that. I'll pull out the highlighter. This is 2020 here. And then you look back a little further, showing you 1971, what had happened. It all depends on what time frame you're looking at and so on. And essentially just trying to give you insight as to what has happened throughout these periods, okay? Commodity spot index return is this right here. All I'm trying to highlight the fact that since 2020, there's been this incredible push in basically everything, except for gold, except for silver. To me, that's not just strange. That's not just an anomaly. It's pretty obvious that we have some very serious manipulation. So let's get to the Money GPS insights. Number 1, consumers are already paying higher prices. Inflation, if you look at it as price inflation, it's clear. It's already here. We don't have to wait for it to arrive. If they're going to charge you, let's just say a Big Mac, it's $10 or whatever for a combo, are you ever going to see it at $8 again? No. They bring the prices up. If the actual commodities decline, if the raw materials decline, that's just more profit for them. And then on the other hand, number 2, monetary inflation is already here as well. They're pumping this out, the quantitative easing, like never before. We've never seen anything like this. So you've got that, and you've got the fiscal side as well. Everywhere you look, the inflation is there. What's coming tomorrow and down the road, we'll have to see. But for the time being, this is what they're doing. This is where they're going. And then number 3, you must look at your portfolio and you must rotate. You must readjust, and you can trim your winnings and you could start to look at things that make more sense for the time being. It all depends on what you're doing. If you're holding long on certain things that maybe look a little risky now, perhaps swing trading is more appropriate because you could be in and out and not necessarily have yourself completely exposed. There's much more to it than that. But of course, this is the mentality of the investors today. I'll show you exactly what investors have been up to in just a minute. All right, really quick, few things that I wanted to touch on. We had seen rents that were sky high, and then because of the issue 2020, everything fell down, and places that used to rent for $2,000 started to rent for $1,700, $1,500, and lower. And it all depended, by the way, and they were giving out 2 months for free. They were giving incentives left, right, and center. But now that started to change. And you can see that in a lot of these places. Rents in hard-hit markets continue to rebound. And you can just see all these different cities, San Francisco being the worst one here, minus 17%, but it has come back up from its lowest point. Rent prices are rebounding in cities that have been hard hit. This is just showing you, for example, San Francisco, May 2021 is up 3.8%, and you look around New York and so on, and this has been the trend, okay? Expensive cities experiencing the largest rent declines over the past little while, but look at some of the places that had seen an acceleration, like Fresno. I had talked about this one before. Some of these smaller cities that had been depressed for a period started to see an acceleration. So it was completely different for these areas. So this is something from apartmentlist.com that I found to be that, I just wanted to show it to you in case you're interested. You can check it out. You could see basically the trend by simply putting your mouse over the different cities to give you an idea of what has been happening. It's interactive, of course. If you want to check it out, the link will be in the description. So I would recommend checking that out. Now, what have investors been doing? No, I'm not talking about the investors on Reddit. I'm talking about the investors that are part of these big institutions and so on. Where is the big money going to and from? And we can get this data, a lot of that from the EPFR. You're seeing right here, Reuters covering the Refinitiv data. In this case, money market funds received an inflow of $53 billion, the highest in 4 weeks. I got a chart to show you in just a second on that, actually a few charts. The higher inflows came as investors were watchful ahead of the report of core personal consumption expenditures to be released on Friday. And they basically say, what's going to happen with inflation and so on. So they move to cash temporarily, and then they can redeploy. Various Fed officials said that they expect a pop in inflation to be just temporary, or transitory as they love to say, and signal policy will remain ultra loose for some times, blah, 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 blah. Okay, now you could see coming into this, record, stunning $414 billion inflow to stocks in the past 16 weeks. So the money had clearly been there over the last few months. There's no doubt about it. 2021 had seen this definitive rise in the markets, depending on, of course, where you look. Some, like tech stocks, didn't see the benefit of it, but some others did. That's why in some cases, like if you look at, let's just use the example of Amazon. Amazon, I don't have it pulled up right now, but Amazon stock had really performed, sort of trading in this channel for such a period, almost a year. And, if you were swing trading, you could have been in and out and perhaps profiting through the ups and downs. But if you are necessarily just holding long, okay, if you held long before that, you're okay. But throughout that period, 1 year, just sort of trading sideways, you don't really get to see the benefits of what's been happening, all that cash, all of the inflows that have been coming in. So you got to be strategic with where your money is. Some positions are long, some are being swing traded, and so on. That's something perhaps in the future we can talk about. Okay, I've gone on way too long. This is just showing you here fund flows into global equities, just giving you an idea of what's been happening, broken down by sector, and giving you, the whole breakdown here. Unfortunately, I've run on too long. Refinitiv just breaks that all down, and I always try to show that to you because I think it's really, really, really important. If you want to get this and sign up to the insiders, I would highly recommend it. By doing so, you are able to actually get an email from me 5 days a week that's going to allow us to correspond. I will send you the video of the day every single day. I actually created a PDF for investors, financial education, and so on, all to be in this PDF that will be included in the insiders when you sign up. So look forward to that, especially if you haven't already. You definitely want to hit that thumbs up button and subscribe to the channel, please. It helps me out a lot. If you haven't watched this video, definitely want to check it out. Click it, and I'll see you there.